All right, guys, welcome to this training session. In our previous training video, we talked about trading strategies. So if you have not seen that trading strategy, please just somewhere around the video, you can go over to check uh, in the channel, you see a video on trading strategies. So today we'll be talking about order types and order book. Talking about order types and order books. First of all, we'll start with order books. And from order books, move to the various order types. Now, back on our screen now, order book simply means an open market where you show an open market in a currency pair where you can show, you can see out what people want to buy, what people want to sell, the current price people want to buy, current price people want to sell. So what you have in this screen is called an order book. It's another book, but the currency pair in this case is Solana and USUD. So that's called currency pair. It's called a currency Solana and USD. That means I can sell my Solana to USDT, or I can use my USDT to buy what Solana. This is called a currency what pair. So now right in this region, if you look on the region of red simply means the current price people want to sell their Solana. Then green means the current price people want to buy Solana based on the market movement. So the list region here, on top of this, 49.39 is called the best bid, while 49.32 is called what the worst bid. Now, in terms of selling, on top of this is called the worst ask, while on top of this is called what now? The best what ask. So in terms of asking for selling, the cheapest price is called the best ask. For bidding, the highest price is called what the best what bid. Now the difference between the highest buying price and the lowest selling price is called what you know as a spread. So if you're looking at a market, you always want to look at a region where you have a tight spread. Once the spread is tight, therefore means that the market is not going to move too far. If I subtract from here, 43.40 minus 43.39 is just about 0.0001. So you find that this is a tight spread. So the difference between the best bid and the best ask is called what? Spread. So when you're looking at market, look at a market whereby the spread is what? Tight. If the spread is tight, therefore means that the volatility of that particular cryptocurrency market will not be what? Too high. So again, this region of red is called for asking, that's for selling, while the region for green is called for buying, or for bidding. The highest on top of here is called the best bid, while the lowest here is called what now? The best what ask. And the difference between the best bid and the best ask is called what? Spread. So that is so everything you are seeing on this region is called the open order book. So what you are seeing, this analysis is called what? The order book. So when you are trading cryptocurrency, it's very important for you to understand what is happening in the order book. So now let's move over to what you call the order type. The order type. So let's scroll down to the region where we can have our buy and our selling. We can talk about what the order type. Now, if I click on this region, this is the buy, the red again is the green is buy, and the red is what? Sell. Now, if I want to buy, there are different aspects. So let me start with the first type of order type. The first type of order type is called the market. The market what order type. If I click on this, the market order type. In the market order type, what are you doing? You don't regulate the price which you want to buy. You can only regulate the quantity which you want to buy. If it is selling, you can also regulate the quantity you want to sell, but you cannot say about the price. That's why they call the market price. So the market price simply means that you have no control over the price in which they sell to you or they buy to you. At the market price, you buy cryptocurrency at the current price, or you sell cryptocurrency at what? The current price. That's what's called market price. Remember, in market price, you can only regulate the quantity you want to buy or sell, but you cannot regulate the price. Now, the second type I want to look at, second type of order type is called the limit order type. In the limit order type, there are two things you can do. You can decide to fix the price you want to buy or you want to sell, and you can also fix the quantity you want to buy or you want to sell. So let's say, for example, you've done your analysis, your fundamental analysis and technical analysis, you find out that maybe the price of Solana is going to drop. You can click over here and edit the price you want to. Say edit the price you want to, that's called the limit price. You fix the price you want to. Let's say I expect that the price of Solana is going to drop. I can fix to 38.5. That's my expected price. I fix the price which I want to buy that Solana. And I can also fix the quantity I want to buy. I can say, let's say one what? Solana. So that's the limit price. So limit price, you fix the amount you want to buy and also the quantity you want to buy. That's what limit price. Now the third type we have here in this region is called the stop limit. Now in the stop limit, under the stop limit, you have what you know as stop loss and take profits. Now the stop limit, now this is what you call stop. If for buying, let's say for example you want to buy, you fix this price, you want to buy at this particular price, which is the current price. You can fix a price which is what lower. You can fix a price which is lower than what you have here. I fix a price, let's say this is the current price. I'll tell you that I want to buy at this current price of 3.36. But if peradventure the price goes down to something lower than this, I want to buy it. Let's say, for example, the price I'm expected to buy at 43.36. But if the price goes down to something like 40.0 USDT, I would prefer to buy it at this particular price instead of 43.36. Then I also fix the amount I want to, the quantity I want to buy. So this is called stop limit. Then if it comes to selling, let's say for example, now I can click on this selling this region. Let's say for example, this is the current price that is selling, but I expect that the price needs to go up. I want to sell at a higher price. I can put a price. So under the selling, you put a price that is higher than the current price. But under the buying, you put a price that is lower than the current price. So I would say that I would likely want to buy for 3.3 this. But if privation, the price gets up to this 45, let's say 45.67 USDT, I prefer to sell at that price instead of this. So remember, we have three types of order type. We have the limit, we have the market, or we have the stop limit. Under the stop limit, we have the stop loss, and we have what to take what profit. In the take profit, let's say for example, my target is the take profit when it goes to selling. Let's say my target is let me say my target is 45 point something US dollars, the limit price. But if privation gets up to 44, I prefer to take my profit before it gets to that 45. That's what take profit. Then in terms of our stop loss, let's say privation, my target is 45 point. I want to buy at 45 point. Let's say 45.45 US dollar. But if you get to something, let's say I want to buy at 43.36 USDT. But if you get up to 40, I prefer to exit the market. I prefer to exit the market with the ratio. These are what you know as what order was type. So again, I'll go over what I talked about. We'll talk about the order. The order book. The order book shows the transaction between buyers and seller. And I told you that the lowest in terms of the low at this region here, this is what you call the best 43, but the lowest here in terms of sales called the best bid, while the highest it's called the best ask for 3.38, while the highest here is called the best bid for 3.78. Now the difference between the best bid and the best ask is called the spread, and I said it's very important for you to look at when the spread is very tight. Once the spread is very tight, that means there's no large volatility in terms of price. Then we'll talk about the order type. I said we have three classes of order type. We have the limit. The limit, you choose the price which you want to buy and the quantity you want to buy. The market, you cannot choose the price you want to buy. You can only choose the quantity you wish you want to buy or you sell. As well as stop limit. Under stop limit, you have what you know stop loss and the stop under stop you have a stop loss and take profit. So you fix a price, a limit price, and you also fix a stop price. That's the difference. So these are actually the basic type of order type. We have the open book and we have what the order type. So this is where we should be ending with this training section. So if you get value from this training, feel free to like, comment, and also share this video for more persons to see. If there's something you want me to discuss as related to cryptocurrency or other ways to make money online like we discussed in this channel, please feel free to drop on the comment section and we're going to discuss it. See you in my next session. Okay.